All right. Good morning, everyone. Let's get going. All right. Last night's session in the States, we started off relatively soft and really just drifted up into the middle of the day session, and then from there, really moved out to the right. To be honest, I think it was quite a good hold considering, we had just had our first two closes of all time over the 2000 level in the S&P, and on the back of the market running pretty hard into those levels. But there was actually a lot of negative news out yesterday. There's all of a sudden a lot of random events. I suppose when you look at things like Ukraine and Russia, which more or less kind of maybe officially went to war yesterday, with Russia starting to invade with proper Russian troops, and a handful of other news items, particularly out of China, and that then we kind of came in the States, and we really just had a lot of positive data prints again. The same sort of thing that we've been talking about continues to happen. Data out of the rest of the world sucks. Data out of the U.S. very good. We came in with a better than expected print on GDP. Second quarter GDP at 4.2% versus expectations of 4%. Things really starting to pump there in the States. Finally, and the unemployment, the jobless claims numbers coming out yesterday as well, below 300,000 again for the first, for the second or third time I think in about 4 weeks. So we continue to see good data in the States. Probably managed to kind of keep the U.S. markets hanging on to it a little bit, but even with those numbers, it wasn't enough to see a turnaround in bond yields yesterday. We still managed to see U.S. longer-term debt, trickling lower. We have seen the 2-year paper start to move back up to about 0.5%, and the yield curve is starting to get flatter and flatter as we look at it. But we'll continue to monitor that going forward. But I think it's, we're watching something that's very important over the recent few weeks. And we're going to need to continue to gauge that on a daily basis. I think it's going to be a really good indicator for where markets are going to go in the future, is where not only U.S. bond yields are, but where the rest of the world's bond yields go. If we look at even with the good GDP prints out of the States, we continue to see weaker than expected numbers out of retailers in the States for some reason. So it's kind of a real interesting dynamic that's going on there at the moment, with retailers really struggling, or some of the clothing retailers, let's say, really struggling. The rest of the the tech space and the energy and industrials and those kind of things trading incredibly well. All right, let's look at Asia. Asia, you can see a little bit of a pullback in most markets there. Shanghai was really the only outlier. Maybe just drifting up a little bit yesterday. I read an article out of from some of the bigger unit trusts, or you would call them mutual funds in the States, that have been putting money into Chinese equities the last few months, kind of looking for potentially some bottom picking and that sort of thing. Real interesting that the ETF there has had its biggest month of inflows this month since 2012, December 2012. Almost $500 million have gone into the ETF, the U.S. ETF this month. So it's kind of interesting considering that the Shanghai hasn't actually traded that well this month. Also interesting that Tencent is one of the 25 holdings in that ETF, and Tencent also hasn't really traded so well over the last few sessions, where there's been a lot of flow going into that ETF. So I think all of that is interesting to note. Other than that, in Asia, very little going on. Chart of interest today, really showing the U.S. Corporate debt as a comparison to the U.S. equity buybacks at the moment, and you can see how symmetrical that is when you look at the opposite ends of the chart there, and really what it's showing you is that most of the, you can see how congruent it is. I mean, a big portion, probably the majority portion of the net debt that's been taken out from a lot of these corporations recently, of the last little while, has been has been to buy back stock. You've seen lots and lots of these companies that are doing it. People like IBM that are borrowing at under 1%. People like Apple. All of these guys are coming in. And these guys are pumping a lot of that money into buybacks at the moment because they think that that's a good return on equity. What that's done is it's obviously created a big boost in the equity market, and a lot of guys concerned that some of these buybacks are potentially starting to wind down at the moment now. So it could be quite interesting to see if they stop buying back so much stock, what that's going to do to equity markets. All right, and corporate action today is absolutely nothing to speak of that I know of. This morning we had a lot of numbers out of Japan, jobless rate, which came in slightly higher than expected. CPI numbers there, dead in line. We had retail trade that was better than expected. Industrial production that was a little bit worse than expected. In the UK, we had nationwide house prices that were actually better than expected, up 11% year on year. That's fantastic. Local M3 money supply numbers lower than expected. What a surprise! We've got in higher than the SARB bands for their inflation at the moment, along with lower growth and lower money supply growth, which is just negative all across the board. We've got retail sales out of Germany this morning that were also soft. We continue to see the negative numbers coming out of the Eurozone and obviously leading to the bottom line in Germany at the moment, and Germany really taking the brunt of that recently. We've got SA private sector credit year on year, which is actually a little bit better. We've got retail sales coming out in Spain a little bit, along with GDP out of Italy. Then later here locally, we've got trade balance numbers as well as the budget at 2, so that'll be really interesting to look out for. And then in the States this afternoon, we have got personal income, Chicago Purchasing Manager, and University of Michigan confidence numbers. All right, let's get into the maps. All right, first thing we're going to look at, this chart doesn't come out really well because remember this is a settlement contract. It's not it doesn't trade throughout the day, so you get one price per day. So it's just dotted along the line, but you still should be able to make it out there. I'm not even going to bother trying to turn this to a line chart because for fear of not getting it back to this, to candlestick charts. But you can see there, bottom line, we've dropped out to new lows in iron ore on a bit of a continuation pattern. This chart just looked really bearish. Some of the forwards, in fact, are even lower than this, and I think that this has been a big story that's played out recently. We've seen the iron ore stocks about 4 or 5 sessions ago really turn negative on the maps. We were all over that. I mean, we were showing all of those charts 4 or 5 days ago when some of the stocks were as much as 5 or 6% higher. We obviously got a washout yesterday. We were a limit down in iron ore and in Asia, and really things are just starting to look ugly here. I know specifically that a lot of the guys are talking about iron ore below 85, especially for Kumba and the likes and some of these other guys. It really puts them under big pressure, and especially guys like Kumba, which takes such a large amount of their earnings out of the single commodity source. These guys are going to be impacted the most. Obviously, you saw Rio Tinto down almost 4% in London yesterday, along with Anglos and Billies getting really hammered. ARI, the entire space really just got hit, and I'm not so sure that it's over. We're taking out new lows in iron ore, and the stories out of China at the moment, unless we get some sort of stimulus news out of there sooner rather than later. There are some talks. A lot of people are whispering about stimulus and hoping that stimulus is going to come soon. If it doesn't come soon, these things I think are probably have further to fall. So it's going to be interesting to see how that plays out. All right, if we look at Anglos, sticking on the iron ore theme, you can see here when we showed this a couple days ago before it dropped that this pattern was kind of shaping up. Yesterday we actually dropped out the head and shoulder pattern. Definitely pretty clear cut. We're looking at quite a low target here, to be totally honest. I would say that the target, let's just have a look here, 297 from the dropping support here at 273. So yeah, we're looking at as much as a 26 rand a downside from that 273 level. So I would say that we'd be looking to come down here at the very least, maybe to to test the low 250s and Anglos on that head and shoulder being dropped there. And like I said, I mean, I know it seems extreme. It was just testing close to 300 the other day. But bottom line is, iron ore is obviously such a big part of the earnings stream from Anglos, along with these other guys. The oversupply is there. The price is really coming under pressure. And wouldn't be surprised to see this thing correct down to those sorts of levels. So just keep that in mind. Technically, that's kind of what the target's looking like. If we look at Kumba, which I know we've looked at a lot, I've shown this one several times lately. I really think that this one drops support all the way back here. So we've already cleared a lot of room there, but the target from this broadening formation would be to slightly below 300 as of itself. So just keep that one in mind. But what I wanted to also show was that when you look at this thing, I made a comment to one of the guys yesterday. Every time this thing takes out the lows, the recent lows or lows of the year, it seems to fall really hard. You can see that on this day. I mean, I specifically remember in March when we dropped out to the lows there. It just spiked down and never looked back. It really ripped down there, and then the next few days we got some continuation. I mean, and over maybe a 3 or 4 day period, we dropped from 384 all the way to an intraday low of 348. So I mean, that's over 10% that we fell over kind of a 4 or 5 day period. All red candles there. Same sort of thing if you look here when we finally dropped out the low of around 350. We got 2 consecutive days of just total punishment out of Kumba, where we fell all the way down to 323. Same sort of thing. That's close to a 10% move. We dropped out the lows yesterday. To be honest, I actually thought that I thought that it held up relatively well yesterday, and it didn't get ugly after we dropped 323. We did close very close to the lows, but it didn't, like I said, didn't get messy yesterday. You can see the candles weren't as big as some of these candles when we dropped the lows, but I wouldn't be surprised to see a second day play and to see us come back down another consecutive red candle like we have here when we've dropped lows. So just watch it today. Could see further pressure there today from Kumba. All right, if we look at Sibanye here, Sibanye really right at a crucial level, call it 2420, 2430, somewhere in that neighborhood, just a major level for it technically. If we drop here, I'm not sure exactly what you call this, maybe a sort of a rounded reversal, a rounded pattern here that we've seen at the top that's really lasted months. If we drop this level, I mean, you can see how important it is. Obviously, we could bounce hard off of here, but this is going to be one to watch around this sort of level. I'd probably like to see it drop 24 for just real confirmation. If it gets to there, then I think we quickly see this thing move down to its 200-day moving average, maybe down closer to 22 Rand. All right, if we look at Impala, I just want to point this one out. We've been on this one for a long time now. We've been telling guys not to pick the bottom on this chart. We've been talking about how bearish this one has been. I mean, I sat on this for as long as possible in the short. I didn't catch yesterday's move, which is frustrating. But bottom line is, you can see we talked about the other day when we dropped this 103.50-ish level. Just go down to the wicks here, where we really were bottoming out. And when we dropped out this 103.50 level, there was a little bit of real consolidation in here, probably for about an 8 Rand move, 9 Rand move, something like that. And so we've reached that target as of yesterday on the downside on an intraday basis. Also, you can see we've really been in a really downward sloping channel, which we kind of drop below. So it's probably a little bit overdone. It reached the target, but I mean, from the way that it's been working in this channel, maybe a little bit slightly overdone in the short term. So just watch out for that. I think maybe it's time to take profit on this and look to resell. When it makes a bit of a bounce on Impala. All right, and the last one I'm going to show today is Amplats. You can really, sorry, I've just screwed that up. You can see here that we're right at support on Amplats. I don't think we've dropped it yet. I would say, somewhere around 453, maybe even you can call it a touch lower at 452. Either way, you can see here we're also coming right in to test the 200-day moving average, and this thing's really just been in a downward. A descending triangle here, kind of moving into that level. So let's watch it. Every time we've bounced convincingly off of this level. I think today's going to be interesting. It'll be important to see whether or not we can do the same today out of Amplats. If we drop from here, then I think we've got considerable downside in Amplats. And that's it for today, guys. Good luck out there.